Alrighty. Doc from North America here. Good morning, good afternoon, and good evening. What do we got going on here today? Oh, that's the S&Ps. They've been working it down. There's the European Open right here up in the 20s. And they've been selling it down since. There's Janos. Microsoft. Yeah. Down $6.50. Not that big a number, when you think about it. We can take a look at it. What did the Elf Magic show before the earnings call? That's funny that you say that, is because there used to be a show for years. What happened there? Why do they keep on giving me that advertisement? And it basically, what it really comes down to is they used to call this show Wall Street Week. And they used to refer to people like myself as elves. Did you know that? So that kind of fits perfectly. Elf Magic. They used to refer to us as the elves. They want money. They pop up. Yeah, that's what. Yeah, I see that. Yeah, I've noticed that. It just on that one computer it wants to do it. It doesn't do it anywhere else. But they used to call them elves. So that's funny that you use that. Now let's go over to Microsoft. Let's see if we have Microsoft. It's only down $6, which is not that big, Let's see if we can find it. Let's see, where do I go? Here we go. Right there. Okay. And let's take a look at Microsoft. There's Tesla. You can see Tesla's been relatively firm. The fast-moving algorithm got going a couple weeks ago, and you can see the strength that it was in there. Then the old slow algorithm is joining in now. It's almost like the top of the action for the time being. I've noticed that when the fast algorithm starts a couple weeks early, and then the old algorithm kicks in, that can be a top. And then so these last 3 days, it gapped up on Monday. There's Tuesday. There's Wednesday. Now this is live right now. It's trying to move back down again. But let's take a look at Microsoft. Let's see. Open. So let's make a copy of this. Copy. Paste. Now, let's put Microsoft in there. Mr. Softy. There we are. Someone else during the webinar asked about Microsoft. There we go. Here it comes. And let's put the weekly in there. There we go. Now notice the weekly. Let's see. Let's put the weekly up there. All right. So the weekly never got into the buy, which is interesting. You can see that right there. And the fast and the slow are joining together almost. The weekly, it hasn't, as you can see right there, it's just underneath it, minus 46. So that makes some sense there. There's the 46. Let's see, what else can we say about any of that. The daily, you can see here, the daily went into the buy here, just like Tesla did. These are Tesla's lines too, so that's kind of interesting. There's the sell right there, and then that it's not as volatile, I guess, as Tesla. So there's the buy right there, and then move that out of the way, and then the sell is right there, and then the other buy is right there, And then we can use that cell now. We'll put it in right. Now I can't put it there. It's right there. And then move this buy over, which is right there. And that was a poor buy. And let's see. There's a sell. Is that the sell? No, that's the sell. And there's the buy. So there was your buy in a weekly buy right here. Then we went into the weekly sell up in here. I guess it'd be move it over to there, like that. There's your sell. And it still hasn't gotten back into the buy yet. There we are. So the math, it was climbing up here the last couple of days, but it's still in the weekly sell, so you don't want to, really didn't want to take any longs. Where's that? There it is. Let's make that really small too. There we go. You can see it better now. If we make this a little bit fatter, style. There we are. So you can see here it's it's still not in the weekly buy. Only the fast is trying to climb in there at this point. I hope that answers some of it. Please zoom in more. Oh yeah, okay, let's do that. Zoom, right there. There we are. Let's move that line back down again. There we are. So you can see it's been in the sell since, well, even when this tried to get into the buy, it was in the weekly. No, it wasn't. It was in the weekly sell at that point. Let me just move it over a little bit. Yeah, so when it went into this buy, you couldn't take the trade because we're in the weekly sell. So it's been in the sell since back in here, since the 245 area, something like that, 240 area. It's not really down much when you think about it. And look at this low here in the beginning of January. They put a low in the 220, so they really haven't damaged it that much with the earnings. I guess it was the earnings. The numbers, I guess their cloud, was it? I heard something about their cloud income was down. Let's have a sip of tea. So there's your numbers. I don't know. Well, I just think that they'll correct it a little bit and they'll start taking it up again. I really don't see like a top in this market for at least another couple of weeks. I think that, at best we'll see somewhere around early February, they start to sell the market off a little bit. We'll see some pressure. I think I mentioned it yesterday. It's like they'll start rambling about, go in May and sell away, blah, 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 that type of thing. I won't take it too serious. I think the rhythm is already there. In other words, I see the numbers already. I mean, it's been a great January. I mean, look at it. They made these lows. There's the end of the year right there. Right there's the end of the year in Microsoft in the 30s or 29s or something like that. Over a couple-day period, they drive it down into the 20s. The stock drops almost $20, okay? And then rallies over $40 from its lows. Now, I guess you could say is that we'll probably see, more buying. They'll see it as an opportunity to get in there. I see the market's trying to go sideways up for a couple more weeks. And then we'll see what February brings. If they top the market out, they're going to top it out. They'll top it out in February. And then they'll drive it down for we'll have 6 weeks of down movement. People will be all frustrated. They'll be talking about sell in May and go away. It started early, blah, 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 all that other stuff. They'll be making excuses. Then, I guess what it comes down to is the debt ceiling and the backing off of spending. If they back off on the spending, because they haven't been spending on anything that works, so it doesn't really matter. If anything, I think they're using the money for campaigning, honestly. I think that's what the Democrats have been putting all this. That's why they make them omnibus bills. So they're not even telling you where they're spending this money. They're just plowing it into accounts they can grab from it. Democrats have been spending 4 times more money in campaigns than Republicans. Do I really believe that smart money is donating that much money to them? I don't believe it. The polls show nobody has any interest in voting for a Democrat for like the last couple of years. And how are they winning? They're doing, they're spending government money probably to win elections. You don't spend 4-1 and still lose the House of Representatives, honestly. They were able to grab a couple seats in the Senate. You just don't spend 4-1 and 5-1, with public money. In other words, people's money. People are not willing to donate that much money. Soros, that guy from FTX, he donated almost the same amount of money as Soros. He talked about giving the Democrats over $1 billion at one point. He gave them hundreds of millions. So, hell, that's only like 3 campaigns, hundreds of millions. Honestly, where's the rest of it coming from? And so if they cut the spending and all those crazy bills, maybe we'll see a lot more happier market. Market will start to look at the stock market will look at it as a move. Now here, looking way back, you can see the product was trading up in the 290s. There's 290s, and I think if we go even back further, I think it was up in the 300s. Yeah, there you go. There's a high. What is that? That's 3. What is that? What is that? That's 344 area. So, it's lost a third of its value. Most of the tech stocks have. When we look at all that. Hey, Robin. So that's the way I'm seeing it all. All right. Where do we go from here? We go over to the dollar index. I made a chart which was very interesting. Let me show it to you. There's the dollar index, and you can see, the DXY. It's moving up nicely. Hey, George. And let me show you gold. All right, you know how gold and the dollar kind of plays around with each other in opposite directions. Let me show you gold. Here is February gold, which is the front month contract, but getting ready to change. Right there. There's gold, and it's kind of was moving up, and it started to break down today. We're starting to flirt with a daily sell now. It wasn't that way when I first sent the charts out this morning, but it's breaking down more and more. But this is the chart I made. I made the April chart. That has more open interest, but the volume is still not there. So we're probably going to be, you can see it here. See how you see closes or opens or something like that. You don't even see any highs and lows and so forth. You can see the weekly has been in a weekly for a while here. And you can see here, we're just, it's just all filling in now. We're starting to see highs and lows. And look at the thing. It was trading as high as, I saw 55. Now, that's interesting. The futures contract is not reflecting that. What is that? That's the 20th. That's the 23rd. Let's see if we can get this thing to fill in more. That's not even today. But the thing was up around $55. It's still not in there. I'm not sure what's going on there. Let's see if we can get that. It was up to $55. Matter of fact, right now, the contract is showing it's at $55. Let's see if we can get this thing to straighten out. All right, let's try this. Let's try 27. Let's see what that does. Now that's 2 days ago. That's still not showing you. let me see if we can fill this in real quick, and we'll do it in front of you because I think it's well worth looking at, and that's the fact that they're buying the back month in gold. And I thought that's kind of interesting. We're seeing the currency move the way the currency's moving, and I thought to myself, wow, they're buying the back month and selling, starting to get out of the front month. So let me fill this in real quick so you can see what I'm talking about. I didn't realize that it disappeared. I'm getting some really odd stuff going on here. Right there. Let's see. Let's move that over like that. And like that. And then let's get the April comics. There it is right there. April. And we're going to add this. Edit. And we'll put the 24th and the 25th in there. I'm not sure why it's not updating. It's driving me crazy with this stuff. But it's up over 55, which to me is, it says a lot. They're starting to put a premium into it. And so they're selling the front month now and buying the back month, which means they can't do the delivery. That's what it really sticks out. And then when you look at the the J4X chart and you see that the DXY is running to the sky, you know how, like I said, they like to move in opposite directions there. It's kind of interesting. You got to wonder, when's the dollar going to chill? We've been looking for a rally in gold now since October? Come on, talking about it in September, and we got the rally. It went from 1,650 up to, in this case here, matter of fact, what's it saying? It's at 20,000? Is that even right? Do we have the right thing? Let's take a look at it. Let me load it in here. All right, I'm loading in the... and Robin, take a look at the back month on your machine. There it is right there. No, see, it should be... it should be in the 19s. It shouldn't even be in the April 20s. Oh, I see what I did. I put 4 in there. That's what I did. So it's not 3. I added the wrong one. All right, so let's try that again. That's why it's so screwy. It's 4. So that's what the problem is. Add symbol. Futures. GC. Okay, so that would be J3, not J4. That's what that is. That's what the problem is. J3. There we are. Now it makes more sense. All right, let's see what that does now. That should do it right. There we go. I threw it in there. I didn't look at it too hard. Looked at it on the other chart. Realized that it wasn't doing it. But that's it. Now, there we go. So you can see here, it's up in the 50s. And now they've got it down to 44. So that's today. There's yesterday. Yesterday it settled at 55.6. So 1855.6. That's interesting. The back month is trading $100 higher. That's interesting altogether. That they're trading the April 2000. Yeah, 2000. Yeah, it is 2000. April 2024 contract, not the 23 contract, up at $20,000. So the front month contango thing, delivery is a real drag. So in many ways, when you're buying coins and so forth, I guess you must look at the back months. Really look deep back, a whole year. And I thought that was kind of interesting. I didn't realize it was the 4, but just the fact that the April was doing it. Now, when you look at the contract itself, so you see that there. But when you look at the what is it, the gold contract, and you look at the open interest and so forth, yeah, there's only matter of fact. What's interesting is even December of 23 is trading over at $2,000. and the October of 23 is trading at $1,993. So it's flirting with the 2,000 mark. Whereas here, it's like, what is that? That's a premium right now of from the spot. Spot today is trading at, as we speak, it's let's put that up on J4X too. That is gold up there. Okay, I got the gold up there. So you can see it's trading at 1,927 at the moment. So just a little contango going on there, and the further back you go, the contracts are more expensive, which really says a lot. Matter of fact, would you believe in December of 24, it's trading at $2,100, and in 26 it's trading at almost $2,200 in December of 26 is trading at $2,178, and then it's $2,200 in the next year at $2,206. So that just tells you that's that delivery thing that we always see but don't really get a chance to truly identify. And then when we go back to the dollar index itself right there, the dollar's been getting clocked just the way it should be. It's going down, and gold is roaring up. So I don't know. I just thought that was fascinating. But the idea that the next contract, which the April contract right now, we'll probably switch to going into Monday. And it's got volume of half the volume of February, but it has twice the volume of open interest. So in other words, there's 147,000 contracts outstanding in February, and there's 288,000 contracts in April. And they traded almost 70,000 contracts yesterday in February, and they traded 30,000 contracts in April. So there's some liquidity there. There's some action going on in the April contract there. And I think it was well worth looking at, just that contango going on. And then now we've had a good conversation about the idea, if you go back to, April of a year from now, it's trading in the $2,000 area. So it's like a diminishing return thing going on there. Denny's, how you doing? So that's the gig there. And I hope I answered you, Janos, on the Microsoft. And, I $6 is nothing on a, what's that, 1.5%, 2%, something like that. 2%. Cool. Did you know that Louis Rukeyser from Wall Street Week fame used to refer to traders like myself, the guys that worked on the floor doing technical analysis, as the elves? Matter of fact, he had the elves index. He used to take a census of what we thought on the trading floors back then. So there we go. So where do we go from here? I guess we shoot over to the euro. We take a look at the euro. Anybody want to see anything else? All right. Let's go. Let's go to Mr. and Mrs. Euro. Right? I can close the stocks out. Let's close the stocks. Close workspace. Yes. There we go. And there is Mr. and Mrs. Euro right there. I think we're flirting right at the zero line. We're just a little underneath it. It's trying to get into the sell now. That weekly buy pressure has been fantastic. We've been, in the buy for a while now here. And, not too concerned about the we talked about it yesterday. It was kind of interesting. Why was Why was the euro being bought when everything else was being sold? I thought that was kind of curious, in its action. And so that's pretty much the name of the game there. What else can we say about the euro? Let's put it up on J4X.
Market data connection lost.
And
Market
there it is,
data
right there. There's the
connection
euro,
reestablished.
holding up very firm. This is the daily. And the weekly doesn't seem to care when you look at it over on Chicago Quant. It's just very happy to stay strong. And then let's take a look at it over here on J4X. We can find the right button. There we are. And there you go. It's been climbing like a rocket. Looks like an Elon Musk rocket. Zoom to the Mars. Zoom to the Mars. All right, and then from there, we'll go look at cable. Cable surprised me. It was, the cable, Swiss, yen, all three of them were feeling the pressure yesterday. Now, I did see where bond prices in the United States were heading down, so I guess they were reaching. It's just maybe, here we go, Giannis. For a change, we're actually seeing fundamentals do something, which makes you wonder. I guess the European Union's interest rates obviously are kept in check, Exactly. Let's go over to the cable right there. Cable's kind of like sitting dead from yesterday's or a couple of days ago. Actually, it went into the sell-off on Monday, and it's just kind of hanging out down here. You can see the weekly is not complaining at all. Closed in that weekly buy last week and just kind of hanging around. So this will probably be one of those where they try to digest, and the next thing you know, they lift. But it must have more of an influence of the interest rates. And we can just show you a real quick chart on the interest rates here. Let's do this. Just a quick flash. Only the flash knows. And we can take a look at the 5-year. Just a quick peek. You see, they've been heading down. When it goes down, interest rates are going up. So you get paid more for owning a bond here in the States. So I guess so they were buying dollars. That's why there was some weakness in cable and yen and Swiss. But over on the euro, they didn't really care. And I guess the logic would be is to put like the Bund up. Let's see if we can put the Bund up on J4X and see what that looks like. Relative to, we could put the 10-year. Let's put the 10-year on the U.S. because I think, let's see what they show us on the Bund. I think we have a 10-year Bund they can show us. So there, I think that's it right there, isn't it? No, that's the indice. There it is right there. There it comes. You can see the Bund, when the price of the bond itself goes down, interest rates are rising. But the last few days, interest rates have been dropping. All right? Yeah, the price of it's going up. So it's doing the same thing as the U.S. product in many ways. And I think that's a 10-year. So, excuse me, and let me put the 10-year up over here. And let's tighten this up a little bit. So you can see here, interest rates have been rising in Europe. That's what that's all about, especially the European Union. And so in other words, as the price of the bond goes down, interest rates are rising. And so then this little rise here meant interest rates were dropping, and then it did it again, did it again, did it again, did it again right there. That's what the greens represent. And so when we go over here, let's tighten this up. And oh, no, let's do it back one. There we go. Doing the same thing, that long slide down, interest rates were rising. Now, the only difference is you notice they bottomed and, it's moving up and challenging these areas here, whereas over here. Let's see, where is that? That is August, right? So let's see what this is. This is December, May. There's August. Okay, so let's go back to August. So that's what that's matching up to right there. So that's August here. There's August there. And, it's come down, made a low. And in this case here, we came down, made a low. And that low here didn't make a new low. Whereas here, it did make it. I guess that's it right there. It made, it pushed a low. And then this low right here over last week made a new low again in Germany. So interest rates are rising. That's probably why we're seeing. Look at how about that, Janos? Fundamentals actually working in front of our eyes. We're actually seeing fundamentals do their job. And I guess if we went in and went to the exchequer and look at the British gilts, the British bonds, they probably are hesitant more. They're probably not following the trend. So, but here we are. We're seeing the good example. There's the Bund to the left. There's the U.S. dollar, 10 years each. And that's probably what's going on there. I'm starting to look at the price of the bond at 139. I don't know what the original price is, so we can't tell. Whereas over in the States here, we're at 115.9. So we're not really easy to tell exactly what's going on, but we can tell you that the correct trend of the interest rate is, and that is that in Europe, interest rates are staying higher than they have been. That's all relative, of course. It's got like that Al Einstein thing, so you don't have to worry about trying to figure that out. All you have to know is that interest rates have been rising, and they may not be a lot, but they're rising. That's what it comes down to. Alrighty, so now from there, we were looking at cable. Let's go over to the Swiss. And I guess if we found a Swiss bond, it would be the same way. We'd see that differential. And there is Swiss. And let's put Swiss up over here. Right there. And so Swiss, it's been just rioting down. And obviously, in this case here, though, not that, let's do this. We'll widen it. The last couple of days, they have been lifting it up. You've been seeing they've made a bottom, and they're lifting it up, the Swiss itself, which means it's losing against the dollar. Yeah, that's kind of interesting. So, and it's staying in the weekly. You can see the weekly, right? Same situation. It's been the product is gaining against the dollar overall, just not. The little daily things are more influential on a day-to-day basis. More of probably the interest rates and things like that, and that's what we saw. What happened with the euro, with the others. Now let's take a look at the yen. Let's see, yen right there. You can see the yen is trying to actually climb into the sell here today. It's below the zero line and joining in again with the weekly trend down. That means it has been gaining against the dollar just the same way the Swiss has been gaining against the dollar, which is the same way the British pound is gaining against the dollar overall, just in a broad sense. And the same thing with the euro. And that's why, we always say it. We're very comfortable to be bearish the dollar side of a pairs trade, in these products with, whereas, obviously the Turkish lira is a whole different story, which is where we're heading next. Let's put the euro up there. Turkish lira euro pairs trade right there. And it's like up on the edge. It's trading right around all-time highs. We had a illiquid problem last Friday, which is kind of curious. There's Friday, and next thing you know, it gets nuts. This, and you can see it. Is that a Friday too? Is it Fridays where they have problems? Let's see what that one is. That one is the 26th. The day before that is the 23rd. There's another Friday, another illiquid Friday. And I imagine when we go and look at Fridays, they can get kind of nuts. There's the 6th. There's another Friday. No, that's a Monday. So that was a illiquid Monday. And we only look at the Turkish lira nowadays through the euro because it's so illiquid against the dollar. It's just wild. It's a zigzag all over the place. It can go swinging away. All right, and then let's see. We go to, where do we go from there? Let's go to the Canadian. And there is the CAD right there. And CAD has been moving down still. It's in a weekly sell. It's got that downwardly drift. It's not having much of a problem. It's just downwardly drift. And then and then what you get is with that downwardly drift, that you get a rise in oil. And so let's put the oil contract up over here on J4X. Speaking of which, I did see natural gas trading underneath $3 today. They tried to get into the buy during our webinar yesterday. Remember that? They actually showed some life. I even made a new copy of the chart, sent it to Robin, thinking we might want to warn our clients. Then we thought, maybe not. As we were watching it go green, red, it was like, why shake them up? Let it close there before we say anything. And then by the end of the day, they just crushed it anyway. And then today, now they got it at around 299 and change, and 298. So there is. Let's put crude oil up on J4X right there. There's crude, light Texas sweet crude. It's been moving up from the low 70s up to the low 80s. It's gone $10 or about 14%. And then over here, we'll take a look at it on Chicago Quant. And there is the spot contract of March now. And what's interesting is it's down yesterday and down today too. Came off the high of, what was that, 82.64. The high there was 82.66. And so they've dropped to $2 from that action. And you can see it on J4X there, trading at 80 now, evens, like with the United States. May I ask about what your proprietary stuff is telling you in general? Oh, that's a good question. I won't even read the rest of that. And then I'll take I'll make that a 2-part question. Okay, so what my work does is it confirms on a daily basis and it confirms on a weekly basis. And so I'm assuming we're talking about currencies or stocks, but I'm thinking you're talking about stocks solely because we just took apart the interest rate factor and the fundamentals on the currencies. So I'm thinking that more, right? You're probably talking about stocks and gold, maybe. And I don't know. Did you see the little thing we did with the gold? Did you tune in for that? Were you on when we had gold going? We can go back to that conversation there too. But I'm assuming you heard the conversation in currencies. Just exactly, and you want to understand what it contains exactly. Okay, yeah. So just let me know. No, I haven't. Okay, on the gold. So you heard currencies though, right? We were talking about the differential in currency interest rates. So we were looking at European bonds versus American bonds, and that's why the euro was gaining. Now, when looking, I guess you could say, what our work is telling us is that the overall trend in currencies is that okay, good. So in gold, in the back months, they're contangoing enormously. And so what's happening is that just 3 months out in the April contract is trading at like $25 higher. You go out a full year, it's trading $100 higher almost. And then you go out another full year and they're trading $200 higher. So what it tells us overall in the gold, not my work as much as just a contango, it's telling us that it's a delivery problem because they're putting such a premium into something that doesn't pay interest. So it's obviously a delivery problem going on there. Now, what our work is telling us on a daily and weekly indication, it tells us in all products. Let's put an example up there. Well, here we got oil right in front of us. So oil goes into a weekly sell here, right there. You can see where we're shaking the thing here. Let's do that. There we go, like that. So it goes into a weekly sell here. Okay. At that time, it's trading in the there's the 90 area that week when it went into the sell somewhere in there, because we always put it at the end of the week. So it encompasses somewhere in there. It went into the weekly sell. Okay. So it goes from the 90s in a matter of like 3 weeks. It goes down into the 75 area. It drops $15 or about 12%. At the same time, every time you get a daily signal, you can trust it 85 out of 100% of the time to being accurate. Maybe sometimes 90%. Depends. It fluctuates back and forth. But you can see here, it goes into sell here. The next day, they clock it down. It's in a sell here. And over a 5-day period, it goes down in value. You get a buy signal, it just tells you not to be short on a short-term basis, but don't be long. It's not telling you to get long. Then we start to get into the buy side in here. So it's a neutral at that point. Now, if you're a producer, what it's telling you is basically how to hedge your inventory. Because as a producer, you're naturally long. So in other words, if you're a producer of soybeans or oil or wood or whatever product, if you're producing a product, then a mining company, then you need to hedge it on some level at given times. Usually they blindly hedge it. They just go out and sell futures forward contracts, and they're hedged. And so what our work does is it gives you a better insight when to hedge and when not to hedge. In trading, it tells you when to be long and when not to be long, and it wins way more, almost 9 times more than it loses. So it'll lose 1.5 times and make 8.5, 9 times. So that's what your first part of the question. May I ask what your proprietary stuff is telling you in general? That's what it's doing in general. It's telling you when to be long and when to be short, when to be flat. The 3 direct positions. The 3 positions. As a trader, you take the 3 positions. As a producer, you're stuck being long all the time. So you always want to try to catch the downdraft because you're long. So you want to hedge yourself when it's trying to go down. Does that make any sense? So in other words, it shows you supply and demand. It's giving you a very clear signal of supply and demand. And, it's technical, so it's learning, and I like to use that word, it's learning from price action and telling you in the future where it's going to be from price action. So the influence of price action in the past tells you where things are going to be in the future. Pretty bold statement there. That's a really bold statement. If you're really listening, I mean, not you personally, but if anybody's listening, that's a really bold statement. The idea that something can predict future price action from past performance. Because normally they say you can't do that. But we do it live every day for decades here in front of everybody. And we'll just wait and see what Denny says from there. Let's see, where did we leave off? So we were looking at Canadian. I'm going to run over to South African Rand. There's a South African Rand. Let's see. Here's the South African rand. Obviously, just looking at the back months, you would assume automatically that we would see a better South African rand trading in the 14s, like it usually would, 14s and 15s. Unfortunately, the product is trapped in the 17s because of the political dynamics that's going on in South Africa at the moment. And you can see we're even flirting with the weekly buy situation right there. Now what we do is we slide over to gold itself, and here is the front month gold in February, which will start to switch soon. And probably by Monday we will definitely be in the April contract. I'm just watching the volume, and we're getting close. And the open interest is twice the amount now in April, so we're really getting close to switching over. You can see right here we're seeing some pressure today. Matter of fact, I thought I had a little red line in there earlier. So there it is right there. Now we just put it there, and you can see it's underneath the zero line. Weekly is not letting go. Weekly is definitely very comfortable being up in that weekly buy, no doubt. When you look at the contango, you know that's a legit situation. So in other words, they can abuse the silver more. Silver doesn't follow as solid a trend as the gold. It follows it overall, but it's much more flatlined. Since we're burning through time here, what I'm going to do is I'm going to show you silver here. There's silver. And so you can see silver has actually been plateaued here for almost 2 months now. Just a big, large plateau. In the beginning, I thought it was going to be a bottom, a base, and they were going to take another launch up into the 26 area. You can see here, it's went into the daily sell here, but we were in a weekly buy right there. It's been in that weekly buy, so it's been fighting to stay in the trend. So you just kind of like don't try to short it, just not be long. And then, in this case here, you can see here, it's you try not to be long and good enough because it finds new lows over the same time period. Again, math predicting future prices. Like I said, that's a bold statement. And we have all the evidence in the world, not counting the fact I send out for decades now a spreadsheet showing historical data every day updated. Yes, more or less the concept I understand. What I meant was what information is built into your indicators. That's a different story altogether. That's a different question altogether. Okay, so you want to know what makes the indicator itself. Well, I use a little of Gauss's old mathematics. I use Mr. Euler's mathematics. I use something I invented myself in a topological form because we're really big on spatial mathematics. We use stochastics. We blend that in. That's why we use 2 stochastics on J4X. We use a concept like Hinky-Ashke for our dots. That type of thing. Just a good generality of all that. So Mr. Euler, Mr. Gauss, a little modified Hamiltonian, a little Einsteinian thrown in for sweetener. I designed it for physics. What information you draw from them to be specific? Well, I'm not going to give you the magic formula, but I'm just telling you the generality of it all. So in other words, you would like to know the formula. We're not going to give that away. It's just magical. It's as Yano says, it's a magical elf. People on Wall Street, some of the most brutal people on Wall Street that are renowned, say my math is like a magnet. And they always say that they used to say my numbers are magnetic, and that the product goes to my number, but what it really is that my number is generated from the product itself, and it just happens to tell you in the future where it's going to be. But I have some people that refer to it like Janos called it the magical elf. And some actually think of it as like a magnetism. They say like, it's like a magnet. It just, you put that number out there and then like a week later it's there. How does it do that? How does it find the number? It's like, I have no idea. It's just it's just the math itself does it. I think that's part of the metaphysics combination to our physical reality. You have Carl Jung, the protege to Freud, talking about the materialistic information that comes out of our heads. People used to think that what Jung was talking about, materialism, thought he was talking about money and assets and valuables. But what he was talking about was that unseen influence, like what is it called, remote viewing type of thing, or gut, like Pavlov called it Pavlovian response, but he really said it was a gut feeling. You have Plato talking about the shadow, Plato in the cave talking about the shadow, the combination of cybernetic and what is it called, hologramic type of information that we just don't understand why we see it, but we see it. We don't understand it, but it exists. I have a formula that does a good job of predicting it if you pay attention to like Hamiltonian and or Lamaze or Laplanche. You look at some of the mathematicians throughout history playing around with numbers like that. So let's see. Information draw them to be okay. No, of course not. Just what are you understanding whenever you look at it? Now that's a good question. I can answer that very easily. Yeah, and you can choose. Robin's saying you can actually. We'll send you for free. Like a couple weeks of charts of any product you want to follow. But I like your last question. That is something I flirt with and think about every day. Okay, and I've been doing it for over 50 years now, and a little under 50 years, and I've back tested it back using Lisa Randall's work out of Harvard. Well, she was at Princeton, and I went. I was there, and I was at her presentation, and I used her back data of expanding galaxies. The math works on that. It works on. I used the Perimeter Institute up in Canada's isotopes. It works on small atomic particles, and then it works every day where rubber meets the road. It works on products and things that are moving in our life. So what am I seeing? Here's the answer. I just gave you examples of where I've seen it. Okay, so I've seen it in the galaxies millions of years going on. I've seen it atomically at the atomic level, and I see it every day. The same formula, using it on all three of them, right? In the markets and in weather and so forth. And what I see is there is, as I alluded to before, it really is, as Plato looked at it in the cave, trying to understand what the shadow was trying to tell him when they used candles or some form of light, and they were making figures, and trying to understand that two-dimensional view. It's telling me that there's another plane in our plane of existence that is functioning, and we're just not identifying it. So in other words, when Michelson tried to define ether, okay, he did it wrong. In other words, he wasn't wrong about the ether. It's there. He just did it wrong trying to prove it. And then, I had something in my head a few seconds ago. Oh, where was it? There was another example now. Lenny Susskind out at Caltech is talking about a holographic event occurring on a black hole, which I don't agree with the math to begin with. I don't believe there's black holes. And so he takes Stephen Hawking radiation, and supposedly a black hole nothing can escape from in their form of Rosen's mathematics. Rosen took Einstein's formula and about 15 years later came out with something of what he called a black hole. Einstein didn't come up with a black hole. It was Rosen. And so the black hole also, which I don't believe in to begin with, but their math says that their math is wrong. So Susskind shows that there's a holographic escape. And then you have entanglement, the thing that Einstein talked about where God didn't throw dice with the universe, and you have spooky numbers at a distance and all that stuff. So there's something going on. Let's put it this way. The way modern science tried to deal with what I'm looking at every day, they adjusted atomic theory, and Higgs boson created an ether. So when you hear about the Higgs boson concept, it's more to create an atomic ether. So they use the Higgs boson field for what I use every day. They're trying to define a field. Oh, there we go. We lost that. So we'll just close it anyway. And so we're done the webinar. But that's pretty much, so when you say, no, of course not, just what are you understanding? And whenever you look at it, I just described it. I think, it's telling us that there's another plane of existence in our time frame, but we're not able to see it, but we can see everything moving on it, and it can be measured. And so that is something modern science does not want to deal with. They readjusted atomic theory to make the Higgs boson fit. So that string theorists, M theory, Witten from Princeton, could have an ether, and at the same time, Michelson and Einstein and everybody couldn't find the ether. They could only tell you about the characteristics that they saw in it. I'm trying to see the light and then return to the cave. Thank you for the explanation. Okay, good. I think I threw enough examples out there. And so what it really is that I created this to deal with. I was part of the anti-accelerator movement. Like, I was against CERN. Before that I was against the tokamak in Texas, and before that I was against the tokamak in Princeton. And I used the accelerator. I had no problem using the accelerator in Princeton at the time, but I wasn't a fan of it. I didn't think it was a good tool. I thought it was a stupid way of trying to understand the next level of modern science. And so then when they legalized option derivatives in the United States in the later part of the 70s, a lot of us in math said, "Oh, screw it. We'll finance ourselves and we'll move away from academia." And so what the math is telling us is that modern science does not understand and will not understand. It refuses to look at it correctly. I mean, how do you have one of the top physicists in the world like Lenny Susskind telling you at the same time that Stephen Hawking is wrong at the same time, but no one talks about it out loud, or that Higgs boson is an ether and not really a particle. It's an ether. It's a field. So you started me up. You cranked me up, Denny. Sorry, Giannis, if I got too nuts here. I don't even know what the title this webinar about. But anyway, the end result is it helps us understand future price action in the markets. Currencies and indices and commodities. It helps us to understand where they're going. And does it remove free will? No, it does not. It doesn't remove free will. I can explain tomorrow how I proved that it doesn't remove free will. I'm trying to see the right. Okay. Yeah. Okay. All right. So we're out of here. This is Doc from North America, or maybe my nursing home, and I'm really having this is all an imagination in my head, and all of you are not really here. And so it's one or the other. This is Doc from North America saying, let's tune in again tomorrow and try it all over again. Is today Wednesday? Yeah, today's Wednesday. So tomorrow will be Thursday. So this is Doc saying from Cattle Country in South Jersey, happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, ta-ta for now, and we will catch you all tomorrow. Same time, same channel.